Hello everyone, Rich here, and here's my first educational video here on TradingView. If you like our trading style, do not forget to like and follow us. And if you want me to talk about a specific topic for the next video, feel free to comment in the section below. So let's get started. As you can see here, we have Euro CHF, Euro Swiss franc, and for those who know me know that we always start with the weekly and daily time frame to know where we stand in the market. Are we overall bullish? Are we overall bearish? Or is the market stuck inside a range? And from a market structure 101, we know that if price is making higher highs and higher lows, means that we are in an uptrend and we should only be looking for buy setups. And if the market is making lower lows and lower highs, we are in a downtrend and we'll be looking for sell setups unless price breaks above our last high. So would be overall bearish, looking for trend following sell setups on lower time frames. Unless price breaks above the last high, then we would have a potential, what I like to call it, a potential reversal. Nothing is 100% confirmed. We are like a detective. We just gather clues and to put the odds in our favor. So when the last high is broken upward, then the momentum may be shifted from bearish to bullish in this case, for example. And in this case, when the last swing low is broken downward, then we know that the market may be shifted from bullish to bearish. And starting from here, we'll start to look for sell setups. So let's make one example or two, and then we'll cover this situation here to know what to look for on Euro CHF for the upcoming days or weeks. As you can see here, here's a quick example. The market is making higher highs and higher lows, so we are overall bullish and trading inside this channel, as you can see in red. Here we go. So we can draw this red trend line by connecting this swing and this swing. We can connect it by using two swings only, as it's from daily time frame. So this channel is for overall direction only. So starting from here, we could look for buy setups on lower time frames. But what exactly happens is that price goes up, the price went up and couldn't make a higher high, higher than the previous high. It made a lower high, which indicates that the buyers are exhausted and couldn't push higher as they were doing before. That's one indication by making a lower high that we may have, that's our first alert, that we may have a reversal, and the reversal would be confirmed after breaking below the trend line and below the last swing low, as mentioned before in our sketch example. So starting from here, we are no longer looking for buy setups, as clearly the market broke below the last swing low. So we are overall bearish, and starting from here, we would be looking for sell setups on lower time frames until eventually the buyers will take over again. As you can see, this one is making lower lows and lower highs. And here we go. The market couldn't push any lower, couldn't make a lower low like it was doing before. It failed to make a lower low. It made an equal low, which is also our first alert that a potential reversal might happen. And the reversal was confirmed after this last swing high was broken upward. Okay, so markets overall bullish, broken, bearish, now broken, bullish. Okay, so from daily and weekly time frame, we know where we are currently in the market to know what we look for on lower time frames. We'll take a live example around here after we make our analysis and know what to look for. As you can see here, then price made a retest. Our bearish structure was broken upward. Then we could look for buy setups around on lower time frames around here. Then price made a retest, and we could look for buy setups around here, especially that we do have a strong demand area around here. The demand area is the base from which the market made an explosive movement upward. And in the case of a supply, it's the base or the last. Sometimes the base is formed with one candle only. It's the last green candle in our case here, as you can see, because it's formed with one candlestick only. So here's our supply zone, and when price returns to this zone, we could look for sell setups around here on lower time frames. So sell, sell, and sell. And we were around here. So price was sitting around a demand. We could zoom into lower time frames and look for potential buy setups. As I see from this time frame, we could draw the trend line from, let's say, from H4 or H1 time frame. Here we go, 1, 2, 3. So this trend line is valid, and we do have like a wedge pattern. It's not a channel, it's a wedge pattern. Here we go, which could be a reversal or a trend continuation pattern. So here's our wedge, here's our last swing, and we could enter buy after a candle close above the last swing high, because we are entering a buy setup. So we could enter, look for buy here, we could look for sell around here. Let's now cover the current situation, where we are currently standing in the market. As you can see here, we had previously a supply zone, which is a fresh untouched point, since here it's already touched and price made a movement from it. So we have to delete it. It's not like support and resistance where we can keep it if price made many touches around it. So if a supply zone, for example, get touched many times, now it becomes a resistance zone. And here we go. So price is currently sitting around the resistance zone, which is a zone, not a laser line. So here's our entire resistance zone, and as price is sitting around this resistance, we will be looking for sell setups on lower time frames, unless price breaks it upward aggressively with many bullish candles. In this case, as price is going to break it upward, then and only then our resistance would become support, and we'll be looking for buy setups on its retest. For now, since price is sitting around resistance, and moreover, if you can see, it's trading inside below this trend line and inside this symmetrical triangle pattern. I like to make it in brown for weekly time frames, so that I know that this one is a rejection key level from daily time frame, from a higher time frame. So, and here as well, as you can see, we do have a minor demand zone, as price made an aggressive movement upward from it. So around here we would have a resistance and this brown trend line, so we'll be looking for sell. And around here we would have this brown trend line, which acts as a non-horizontal support, and this demand zone. So we'll be looking for buy setups. So as you can see from daily time frame, we already know what to look for. Let's make this one in blue, as I usually use the gray zone for our trigger swing, as I call it, the last swing standing. And then let's make this one in red. Here we go. Let's delete these ones to make our chart even clearer. Here we go. So from daily time frame, that's what we know. And since price is sitting around resistance, as mentioned before, we will zoom into lower time frames and look for sell setups. If price goes up or if price forms a buy setup around here, we will not buy. We are only interested in selling Euro CHF for now around this area. Unless price breaks it upward, then we'll be looking for buy setups as mentioned previously. So let's zoom in to lower time frames and look for potential sell setups. Here we go. As you can see from H1, or we can even start from H4 time frame, but let's make it a little bit quicker, as it's already been 10 minutes. So from H1 time frame, we can see that price is currently stuck inside this range. And if you can see, we can draw a channel, but if you can see, we do have a head and shoulders pattern forming. Here's our head, here's our left shoulder, here we go, and here's our right shoulder. The head and shoulders pattern means that the market was making higher highs and higher lows, but now the price failed to make a higher high. It made a lower high. So that's our first alert, an early alert that a potential reversal might happen. And as mentioned before, the reversal would be confirmed. Now we'll make it in gray because it would be our trigger swing. So now our reversal or our bearish trend would start if price breaks below this neckline. So the neckline has to start from the beginning of the left shoulder. As you can see, here's the swing that formed the left shoulder. So we'll be waiting for a momentum candle close below this gray area to sell Euro CHF. And when the sell is activated, our stop loss would be above the right shoulder, and we target a 2-to-1 risk to reward ratio, which would be around our, let's zoom out, here we go, which would be around our lower supply zone and brown trend line from daily time frame. In this case, as price approaches our lower support, we will be looking for buy setups as mentioned from daily time frame. That's it for Euro CHF. If you like the video, as mentioned before, do not forget to like this video and comment in the section below which pair would you like me to analyze next, or which idea or which learning material would you like me to cover in the next videos. Best of luck, and I'll see you on the next one.